So August 19, sell side taken on the Dow at 6. Sell side taken on the S&P at 9. I believe the Nasdaq is behind, and we'll be reaching for buy side liquidity on the Nasdaq soon. Ignore this fair value gap. I think the liquidity will be on previous day's highs, and here's why. Previous day's low has already been taken. Oh my days. Previous day's low has already been taken. Previous day's low has already been taken. I mean, there's a sell side liquidity, but let's look at what the Jones is doing. It took the sell side and is completely running for buy side. As the previous day's highs, and on that higher time frame, we still have this buy side liquidity in the form of sell stops and in the form of buy stops for SNR as support and resistance. So there's a lot of resting liquidity here. There's a lot of orders here in short, and these orders are going to be taken out. The Dow Jones probably is refusing to move up. That's SMT, smart money technique, and this top end is really convincing me. So, and then we have these two fair value gaps here. So I would take an entry on the first one because it might not even come to the second. And if I fail, well, then it's just another day where I took a loss. I mean, you're not gonna get it perfectly. So yeah, looks like I actually missed the trade, the first trade anyway. It happened 20 minutes ago, 25 minutes ago. That would have been the trade, an open position. Stop 10 pips below this candle, which is a 4011, to avoid getting stopped out. And target will be this line, but I missed that, so I'll be waiting to see if it runs back here, or if maybe there's a smaller time frame entry candle. Yeah, there's one right here. I think I'm gonna take an entry here. No, my risk might. I feel like this risk, I can't put my risk there because that's too low. So here, if I get stopped out, that's just a day I get stopped out. I think I'm gonna extend. This was going to be my first take profit of 50. It's a risk, but I think I'm gonna extend that to a 1-to-1 reward ratio. I'll extend that to a 1-to-1 reward ratio. So that's my trade for today. That will be on the Dow. I'm going to execute it on my phone. And exactly what's on the S&P, here it is. Actually, I'm going to do this right now. That's the entry. Long position. I'm going to put my stop at the candle this candle to avoid getting stopped out. And I'm going to aim for a 1-to-1 risk to reward ratio, which would be my first take profit will be here. And let me see if I can just refine that. That will be my first take profit. That will be my second. Then there's this fair value gaps, these ones. If it goes all the way till 7, I'll hold that position all the way till 7. Because there's a really high chance we'll take that out. And the Nasdaq, see what I was saying, the Nasdaq. I mean, on the Nasdaq, it's gonna go up. This is just a double mislead. I think it's going to show its hand. And if it doesn't, I'm taking my trade on the S&P because it's more friendly. It doesn't have all these top runs. But this is also that's going to be my trade for today. It might come and take out these relative equal lows. But considering that the previous day's lows have already been taken out in the Dow, I'm just going to trust my bias.